You may be on the verge of retiring, filing for Social Security, or you may have just found out that Social Security benefits can be taxable. What we want to look at today is how are Social Security benefits taxed, and do you have any flexibility about how that impacts your retirement? Hello, my name is John Vandergriff. I'm one of the owners and the wealth planning team lead here at Blue Ridge Wealth Planners, where we help people with all things that go into retirement planning. One of those very important pieces that are outside of the funds that you've put away and saved is Social Security and the decision that you make about filing for those benefits. What a lot of people don't tell you, though, is how those benefits are affected by taxes and taxable income coming in from other sources. So we want to look at that today and see first what is the impact of that, but also what are some ways that we could potentially reduce that. So as we look at this, we have to understand the formula that Social Security uses to determine what those benefits are taxed at. So what we do here is we look at half of the Social Security benefit that you are looking at. And again, we're not going to be talking about disability if there are any special rules with that. This is just a normal retirement situation. So half of your Social Security benefit amount, whatever that is, as a single person or a combination of both of yours as a married couple, plus any taxable income that you have will add to this. So again, that's going to be wage income that you would have, interest that you accumulate, dividends, even municipal bond interest is going to make Social Security more taxable if you're trying to use that as a tax strategy. And then obviously IRA pulls that you take both as distributions, but also when you get to RMD age, that's going to be something that can make your Social Security more taxable, even if you are not necessarily needing those dollars, which is why we want to pay attention to the impact of RMDs, required minimum distributions, for those that don't know what that is. In retirement, and seeing, what is the impact today, but also what are some things that could impact that in the future. So if we look at this, if you are a single person, this is the thresholds that Social Security will use to determine based on that formula. So again, half of your Social Security benefit plus any other taxable income. If that total is somewhere between $0 and $25,000, you actually do not pay any taxes on your Social Security benefit. So again, you say, well, that seems like a low threshold. It is relatively low. As they go up through this, if you are somewhere between $25,000 and $34,000, you will pay 50% tax on the dollars that are inside of this window. So let's say you're at $27,000, so that means $2,000 apply here. Well, 50% of those $2,000 will be taxable, so $1,000 of tax will be levied on the total benefit amount that you have coming from Social Security. And then if that total exceeds $34,000, all the dollars that go above that total are going to have an 85% tax owed. So you got 50%, then 85. 85% is the most tax that you will owe on any Social Security benefit. So sometimes in our videos, you've seen us use 85%. That's why, just so that we can be conservative from a planning perspective. Because again, this will go up until we reach a maximum of 85% of whatever your Social Security benefit is. So this is the rates for single. As we look at this, if you are married, we have somewhere between $0 and $32,000 is no tax. Between $32,000 and $44,000 is 50% tax. And then $44,000 and higher, again, works the same progressive threshold where, if you've got the $12,000 here, that $12,000 is going to be 50% taxable. If you go above 44, those dollars will be 85% taxable, maxing out at a top end total of 85%. So as we look at that, it's important to know, and there's a lot of different Social Security calculators out there that you can Google and try to compute that yourself. Social Security will tell you what portion of this is taxable. Actually, your CPA will tell you what portion of this is taxable when they plug this into tax software or formulas. And again, one thing that's of note, you can actually have Social Security withhold taxes from your benefits if you choose to do that. Some people will choose not to, and then they'll just account for those taxes on other distributions that they have. But it is important to know that you can take that as withholding, but they don't automatically do it. So if you're expecting Social Security to pick up where your employer left off, you need to give them instruction that you do want them to withhold taxes, and then what is that tax rate you want them to withhold from you. Now, the interesting thing about Social Security tax rates, and then again, this applies to both married and single, is you will notice that Social Security became taxable in the year 1983. These rates have not changed a penny since 1983. So what we're looking at is essentially one piece of Social Security that has avoided cost of living adjustments, because in 1983, if we look at $32,000, which is the place at which Social Security became taxable for people in that day and age, that is equivalent today in 2024 using the government CPI website. So if you don't like these numbers, take it up with them. That $32,000 in today's money is just over $100,000 of income. Yet, we see that that has not changed one penny. So as we look at this has not shown any sign of changing, which means every year that's happened since 1983, more and more people have started to become affected by their benefits in retirement and the way they're taking income out, affecting the taxation on their Social Security benefit. So one of the things that we've got to pay attention to in the planning process, because again, you know, if you've seen any of our videos, you see that we talk about all 5 of these areas. But when we start to talk about the impact of taxes and the distributions that we take from our investments can not only affect the total amount of taxable income, but also making things like Social Security more taxable than they have to be, depending on which of the tax buckets we are taking our distributions from. Because again, pre-tax accounts are going to be 100% taxable and 100% impact to those dollars. Tax-free accounts, it depends on if you're pulling from a taxable basis that's already been taxed, that won't impact it, but any growth on that money will. And then as we look at this, tax-free accounts like Roth IRAs and properly structured life insurance plans will avoid the impact to Social Security, to where you could be funding your lifestyle exclusively from a Roth and be in a position where you got $100,000 of money coming to you, but it will not show up that way on your tax form. And there is a chance that by not having an impact on your Social Security benefit, you could avoid paying taxes altogether. So as we look at this, one of the things that we want to pay attention to is not just the needs that you have from your money, but how we see that progress through these areas, but also how we can make good logical decisions and get some benefits from tax diversification and really building that into an income strategy while we're helping you manage your investments and all the other things that we do for our clients. So if somebody's not talked to you about this, or you don't have a good understanding of how you can make some decisions to maybe help yourself in this area in the future, we'd love to sit down with you and see what we can do to maybe partner with you. You know, if the way that we help is a match for you, we'd love to sit down and see if that's possible, talk about ways to build a plan, and then how we can assist you in managing and facilitating all of these different areas moving forward. But if nothing else, hopefully you learned a little bit more about Social Security. And if you have questions, feel free to leave those in the comments, subscribe to our channel, and we hope you enjoyed your time today and look forward to giving you some more content like this in the future.